Hello everyone. This is the pre-market report video for today, 20th October 2023 in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, for the second consecutive day, most of the Asian market and all European market closed 0.5 to 1% negative. Just for fun, only Pakistan major index increased near 2%, but that got less significant relevance on our Indian market. Anyway, jokes apart, basically global momentum haven't improved at all. In addition, last night before the US market opening, first Fed released the Philadelphia Manufacturing Index. The data came as contraction of 9% and it contracted more than expected. I mean, in the last 15 months, only 2 months this index expanded. All other 13 months it contracted. This level of contraction only happened in 2008, not even during 2020. And at the same time, Department of Labor released the changes in the number of individuals who filed for unemployment insurance for the first time during the past week. Simply we can say weekly jobless claims data. The number came as under 2 lakhs for the first time after March 2023. We know for almost last 1 year period, for one or the other reason, any week if we get this good data, always didn't go well in the market. And last night was not an exception as well. This increased the 10-year treasury bond yield to near 5%. Exactly, it reached the maximum of 4.996 and last night throughout the day it trades above 4.99% but haven't crossed the 5% mark. And one more very interesting thing is, last night in the Economic Club of New York, Fed chairman made the speech. In that he said US economy is very strong and strong labor market could require still tougher borrowing conditions to control the inflation. However, he don't think he needs to raise the interest rate for that. Rather than bond market is now doing some of the central banks work for it. Basically, what he is saying indirectly is kind of he's done with interest rate hike and this increasing bond yield itself enough to control the inflation. However, he looks like he's worried for that since it's not in his control lever. Here, because of his comment, as per Fed rate monitoring tool, in the upcoming November month, 99% probability that Fed will pause the interest rate hike. And for December month, we know in last pre-market video, we discussed this. On Wednesday night, the probability of increasing interest rate increased 40%. Now, that 40% in December month now dropped to below 25%. In other words, even on December month, 75% probability Fed will pause the interest rate again. So, in any given day, this is a good news. And as per the last 6 months so far, market has to react positive towards it. But that didn't happen. Market reacted completely opposite. It's like a Big Boss TV show. Expect the unexpected. Anyway, this unfavorable macro data and the 10-year bond yield increase pushed the US market down despite the favorable comments made by the Fed chairman. So, in summary, this historic increase in treasury bond yield made the US market to close further negative. At the end of the day, last night, Dow Jones down by 0.75%, S&P 500 down by 0.85% and Nasdaq down by 0.96%. And about the VIX, it increased over 11% and moved above 21. Another thing we discussed this, on Wednesday in the aftermarket time, Tesla and Netflix released their earnings. In response to that, last night Netflix share increased 16% in one single day and Tesla share dropped over 9%. So, in one single day, according to Forbes, Elon Musk becomes poorer by over 24 billion US dollars or in Indian rupee, he lost over 2 lakh crore rupees equivalent. Then, in case of oil, again Fed chairman's comment, no more interest rate hike this year, pushed the oil price higher by 2%. And at the time of this video, WTI crude trading around 89 US dollars per barrel and Brent crude trading around 93 US dollars per barrel. Regarding Indian areas, because of not so good US market, mostly it was also down. Only ICICI Bank closed flat, whereas Infosys and HDFC Bank down marginally of around 0.3% and Wipro down over 1%. About GIFT Nifty, early morning it closed at 19,555, which means indicating 60 to 80 points gap down opening. So that's all about what happened on the global market. Now let's discuss the India related info. First, let's see some important quarterly results in detail. HUL analysts expected the revenue and EBITDA to increase 3 and 9% respectively. Now in comparison, it did increase to the same rate or slightly above. And on the additional positive side, EBIT margin beats the analyst estimation. However, their total volume growth is not as expected. Then in case of ITC, their revenue beats the analyst expectation, but not their EBITDA and its margin. They said it was mainly dragged down by agricultural and paperboard business. Export restrictions on rice and wheat curbed agri-business growth, while the performance of the paper segment reflected the impact of low-priced Chinese supplies and muted demand in export markets. Anyway, other than these two, Jindal Steel, Hudson Agro and Tata Coffee, those three posted a really very good results. Then about institutional activities, again FII was net sellers. The net sold shares worth approximately 1095 crore rupees, and as usual DIA was net buyers. The net bought shares worth approximately 740 crore rupees. In the recent days, trade volume of FII increased by 1.5 times of their normal day trading volume. It kind of showing that they are reshuffling their shares. Finally, yesterday RBI released their monthly bulletin. It's a huge report. From my quick glance, this is my takeaway. First, in August month, they did sold US dollar in the spot market around 3 to 4 billion US dollars to stabilize the rupee volatility. Second, they highlighted that they were worrying that there is a surge in tiny personal loans, particularly loans of up to 50,000 rupees taken for 3 to 4 months, often for lifestyle spending. If required, please pause and have a look. The number of people took personal loans less than 10,000 in FY 2020 was around 23 million, and FY 2021 it dropped to 15 million. Then in the next 2 financial years, it increased massively to above 40 and 65 million loans. Now in June quarter alone, it increased to near 20 million people, and during Diwali period, I expect it will increase even more. Again, it's favorable for banks since banks can charge higher interest rate on all these personal loans, which can contribute positively on the net interest margin. But overall, I'm not happy with the people's spending behavior change. As a summary, US market again significantly down, global momentum is not improving, Indian ADRs closed negative and GIFT Nifty indicating gap down opening of 60 to 80 points. Again, things are not good, but one thing for sure, comparatively, US market was more negative than GIFT Nifty and Indian ADR. However, this sudden rise in oil price is also not favorable condition. Then as per stock open interest, Tata Chemicals, GMR Infra, UBL, Indraprastha Gas and Ipca Lab and Oracle Financials got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Cipla, Bajaj Auto, Nestle India, Ultratech Cement, M&M Financial Services and L&T Tech got an increase in open interest with a positive price close, which means these stocks got the long build-up. Then about the things to look out. Today, JSW Steel, JSW Energy, Hindustan Zinc, Glenmark, Butterfly Appliances and Central Bank of India are some of the major Indian companies' earnings results are scheduled released today. And in terms of macro, before the market opening, Japan's inflation and Chinese interest rate decision is due. Again, both got the significant potential to alter the global momentum. Then, during the market hours at 11:30 am, UK's retail sales data and Germany's inflation is scheduled to release. In the aftermarket hours, Indian banks' bi-weekly credit and deposit growth data is due. Coming to technical, Nifty opened gap down of over 125 points but regained around 100 points from the day's low and defended the 50-day exponential moving average. Still in the end, it closed negative of 46 points. Thus, on the daily chart, it forms the green bullish candlestick pattern with an upper shadow. Basically, on the daily chart, Nifty took support at the 19,530 to 19,500 zone. Again, it coincides with 61.82% Fibonacci retracement level of the recent rise from 19,333 to 19,850. So, we can expect some pullback as the recent sharp correction since the past couple of days. Going forward, I think yesterday's low 19,512 will act as a crucial support, and until that is not breached on the downside, we can expect Nifty to witness a pullback towards 19,730 to 19,800 from short-term perspective. If it breaches 19,512, then that will push the Nifty to around 19,450 level. In case of Bank Nifty, it also opened gap down and tested the 43,600 low touched in August 2023, but gradually recovered losses and climbed above the 44,000 mark in the later part of the session. However, the index failed to hold on to the same levels due to the selling pressure in the last hour of trade and finally closed 134 points down at 43,755. Thus, on the daily chart, it forms inverted hammer kind of pattern formation, which is a bullish reversal pattern formed at the downtrend. And also, there are signs of positive divergence developed on the daily momentum indicator as a new low in prices was not accompanied by a new low on the momentum indicator, which indicates momentum on the downside is weakening and the possibility of a pullback is high. So, expecting Bank Nifty to witness a pullback towards 44,000 to 44,400 from a short-term perspective. So, that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.